There is a right and wrong way to use the midterm rental insurance strategy along with the arbitrage strategy. And I can speak on both ends that I've done it the wrong way and I know how to do it the right way. So does the arbitrage work with the MTR insurance strategy? And the answer is absolutely it does. However, you need to be very meticulous into how you do this because the MTR insurance strategy in itself requires multiple parties involved. And in this video, I want to break that down. So let's go back to the fundamental offering, right? So when a policy holder is unable to live in their home due to an unforeseen event, what happens is we need to relocate them in a home. And the insurance company is not the one relocating that individual in a home or even their family in a home. What is happening, however, is that there is a third-party vendor involved, right? So insert third-party number one, right? That is the temporary relocation agencies. If you're currently getting value from watching this video, you'll want to make sure you take a second and click below to grab the midterm rental insurance blueprint to help accelerate your process in being able to land these midterm rental insurance contracts with respect to your marketplace. Make sure you click the button below and grab it and continue on with the gems in this video, such as the ALE Solutions, the US Temporary Housing, THDs. There's a bunch out there, MyKey. And so these third-party companies are the ones who are essentially relocation companies that work in extension or on behalf of the insurance company, because the insurance companies don't have the time to be calling homeowners or Airbnb owners like ourselves to say, hey, can you relocate this family for the next 3 or 4 months due to a flood, due to water damage, due to a fire, due to construction, you name it, right? So they work with these third-party companies. Now what would happen is these temporary relocation companies that I've mentioned previously, they're the ones who are reaching out to homeowners like us, whether we're in their database or whether we're on their website, whether they find us on Zillow Rental Manager or Airbnb, they'll reach out to us. Now the question is, if I don't own any property, if I am potentially in a position where I want to go and find an opportunity for them to solve a problem and then, pay a landlord essentially to allow me to rent their place so that I can then place a family, it's a very nuanced approach because there's a lot of pieces that need to fall into place. Number one is you have to have some kind of control of that property, or at least some kind of agreement with the homeowner or green light that yes, you can market that property. Now, if you choose to reach out to this identified home and get the permission, then you can then promote it to the third-party company, which then has a second third-party person involved, which is essentially the displaced policy holder themselves, who needs to then be able to walk that property. So therefore you need consent from the landlord to allow this family to walk the property, and then the displaced policy holder needs to then sign off and say, yes, we do want to live in that home. So the question is, how do you kind of sync up all of these parties involved if you're trying to MTR arbitrage? Well, the truth is there is a solution to it, because in episode 269, which I'm happy to have the link at the end of this episode, I did mention that I did have a deal gone south in the midterm rental deal. Part of it is I had an agreement with the homeowner. The homeowner was fine. Then when it was time to get the contract signed, I got the contract signed with the temporary relocation company after I had received permission to walk the property. However, when it was push came to shove for me to actually get the contract with the homeowner to be finalized on the verbally agreement that we had, there was a situation where clearly they were not the decision maker, which put me in a hole because I already had the commitment and approval from the temporary relocation company, which included the home displaced policy holder and the temporary relocation company that had approved the amount from the adjuster. So I was in a bind where I couldn't deliver on what was said. It wasn't a promise, but it was definitely a, hey, this works out for everybody, let's move forward. And except now the landlord, who was not really the landlord, was not ready to move forward, which goes back to this. So where did I go wrong, and where could I have done a better job and made sure that I covered all my tracks? With this, an addendum. right? And I want to give a huge shout out to Owen, who emailed this in, who clearly has experience doing this. And I wanted to make sure that I highlighted what is the workaround here. Right? And he did messages saying that, he listened to episode 269 and there is a workaround. He's been down that path. And the good way to do it is you want to make sure that you have a one-page addendum when you do reach out to the landlord saying that this contract is contingent to my client walking the property. You want to be 100% transparent of what you're doing, right? The way I had reached out originally, and you should reach out as well originally, is to let them know what you do. Hey, listen, we're a temporary relocation company ourselves. You're a management company or your owner, right? Whatever the case might be, all of you, maybe your co-host, right? And the way you position it is typically we're 100%. Typically we relocate these families within our portfolio, but when we don't have any solutions within our portfolio, we do look externally for additional options because it's in our best interest to continue to serve our third-party clients, which is the temporary relocation companies. In the case that we don't have any inventory available, we wanted to reach out to homeowners like you who have readily homes available for that family in that region in order to be able to facilitate a contract. Now, the contract will go through me. We specialize in this. Here's a website. This is what we do. This is who we work with. Here are some of our preferred vendors. Here are what our customers are saying, etc. We are a trusted company, and this is what we do. Well, I can sign that lease, whatever the agreement is, with a 6 months, 8 months, 12-month lease, 2-year lease, whatever it is. It's contingent that my client moves forward and actually selects their property. They'll need to walk the property and then select it, and then we can move forward with said agreed price. Are you interested in moving forward? If you educate them, a lot of people need to be educated on this process because it can sound a little scammy. All right. So you want to make sure that you're coming proper, you're sending in the information, you get on a call, you talk with them, you meet them in person if you have to give them that peace of mind that this is not a scam, right? You will be the one held liable. Matter of fact, you're willing to pay the first month, last month, whatever the case might be, to give them the peace of mind for you to make this deal move forward. What you do is you get the landlord to permit you to sublet the property, right? In other words, or at least essentially sublet the property, because you're going to have an agreement with the landlord, and then you're also going to have a separate contract with the temporary relocation company. And so because it's a two-way transaction, you want to make sure all parties are on board and involved, right? So you're going to want to do that first. Then obviously you're also going to want the addendum that says that you have the right to walk through the property with the client. Once they grant you that access and they walk the property, two things can happen. Either they're going to move forward or they're not. If they don't move forward, the landlord permitted you to sublet the property. The second part of that addendum is the landlord gives you up to 10 days from the lease acceptance date to get your sublease approved by the insurance company, right? Otherwise, the lease signed is null and void. So you're going to want to have a second agreement in there that states that there's somewhat of a backup exit strategy for this, because if you don't, you're going to be in a situation where you want to have some level of security from the homeowner, from the landlord, that they're actually open to moving forward. And once you have that green light for them to move forward, you want to actually lock that deal down if the family has shown interest in moving forward with your property, because at the same time, you don't know how quickly the market moves. The landlord gets another offer. What will happen is there's a good chance that you might go back and be like, hey, we're ready to walk the property. And they might say it's not available. So you first get the confirmation that they agree to do a sublease with a 10-day contingency. Within those 10 days, you get the policy holder to walk the property. Once they walk that property, then you can go ahead and sign the second leg of that contract and send that, which is going to be from the landlord. And then, of course, the contract that you've issued with the solutions or whoever the company might be, you can sign that as well. The thing is, only once they've walked the property will they require you to then sign a contract. First, you want to get the approval from the relocation company, and then you'll want to go ahead and get that signed. So just to recap, here's how it goes. I've identified said property. I reached out to the landlord and say, or at least see it if it's still available. Then you reach back out to the relocation specialist and send it as an option. If it is available, send it as an option, then they want to move forward and visit that home. So then you would reach out to the homeowner and get that addendum signed. Once you get that addendum signed, they walk the property. If they like the property moving forward, then what you want to do is, considering that the home has been approved by the adjuster, because typically the home is only approved for only way for them to walk the property is for the home to be approved by the adjuster. Once they've done that, they've walked the home, they walk the property. This is the policyholders walk the property, and they say we want to move forward. Then you would sign that lease contract with the landlord before you sign that final lease agreement with the tenant and the policyholder, because you want to make sure you have a contract that is secured in hand, locked in, with still that 10-day addendum that gives you an exit clause. And you would sign that, right? Execute that full contract, and then you would send the signature to that policyholder and their insurance company, because now you have contract that was like a letter of intent. Then the second being, okay, great, we are moving forward after they walk the property. Then you sign that contract with the insurance company to then secure both sides of the bridge. That is how you're able to avoid dealing with what I dealt with, the tragedy, for lack of better words, that I dealt with, arbitrage, trying to arbitrage an MTR insurance deal with the landlord flopping last minute. If you want to watch that video and understand the lessons learned behind the scenes, make sure you check out episode 269, also known as the Midterm rental arbitrage deal gone wrong. Want to make sure you check that video out if you'd like more content in this matter. Click the link below for the Midterm rental insurance blueprint. Make sure you hit the subscribe button, and I cannot wait to see you next time.